All right, well, let's bring in Ariel Investments Vice Chairman and Head of Investment Group, Charlie Bobrinskoy. Charlie, it's great to have you back on the show. And let's start with the fact that small caps, and specifically small cap value, is really having a breakout here this quarter.
It really is. Thanks for leading with that, Morgan. Yeah, it's been a while. It's obviously been a market that's been led by large cap growth for a long time. Now, if you go back a long time, over 100 years, finance departments and academics have shown that small cap value has absolutely been the best part of the market to invest in, but that hasn't been true for the last few years. But boy, it's been true this quarter. This quarter, small cap value has been the best place to invest. And frankly, the reason we think that's happened, it was because it went into the quarter as the one sector that was pretty cheap. You know, everybody's been talking about the stock market is overpriced. Well, that's true for the S&P 500. It's not been true for small cap value. Small cap value is trading right on top of its historic averages and at big discounts to the overall market.
So in light of that, how much of this is being propelled or spurred by the fact that we just got a Fed rate cut? And maybe just as importantly then, given the commentary we got from Fed Chair Powell yesterday and the fact that it's not a done deal that we get another cut at the next meeting, what does that mean for these smaller stocks?
Yeah, so smaller stocks, you're right, tend to be overweighted in industrials, in home building, in energy, and frankly in financials. And financials, regional banks do better with a lower short end of the yield curve. They do very well when we have a positively sloped yield curve. They're hurt by when the Fed funds rate is higher than the 10-year rate, which is what we had. So bringing us to a normal yield curve, which has already happened, is very good for financials, which is good for small cap value. But we've got lots of other sectors that are in much better shape. Things like home products. You know, I always talk to you about Residio and Mohawk, the carpet company, and home building has been very slow. And now today we got a wonderful 20% increase in new home sales. So there's lots of things going on, but lower interest rates, no doubt about it, would help small cap value.
Charlie, maybe the one bigger tech company that you've liked to talk about in the past was Oracle. And Oracle has had quite a month, quite a few weeks here. How much of it have you held on to? How much are you going to hold on to after this enormous move? Does it still represent any value?
Yeah, so your partner, Kelly Evans, asked me about 18 months ago what was my favorite tech value stock, and I said Oracle. But at the time, Oracle was trading at 146 and 15 times earnings. It went to 350 and 40 times earnings. That is no longer a value stock. It's still a wonderful company with a wonderful management team, with a wonderful position in data software. As I always say, AI is all about analyzing data, and that data sits on Oracle software, so it's a great company. It's just no longer a great table-pounding stock. I have trimmed it significantly. It was one of my biggest positions. It's now a mid-sized position, probably heading a little smaller.
Well, you still holding on to some of it, though. That kind of surprises me. Why, and what does that say about the place for AI-exposed names in your portfolio, despite the fact that some of them might look pretty rich right here?
The fundamentals have just been so spectacular. The adding of hundreds of billions of dollars of new orders, the tripling of the backlog, the locking in business with some of the best companies in the world. Just when you have this kind of business momentum, which Oracle does, it is not a bad idea to hold on. Warren Buffett always says, selling your winners and adding to your losers is like watering your weeds and cutting your flowers. It's the right thing to do here is to trim, but to hold on to a great company.
Pruning, I see, not cutting down the tree.